thought I would go live real quick, give you guys some free game real quick. All right, you guys come on in. All right, hopefully you guys are doing well. Want to give you guys some free game. All right, for those of you who are traders, I wanted to let you guys know just a few things about trading. All right, so I'll let some more people come on in, and then I'm going to get started. Make sure you get a pen and paper, take some notes. That way, when the market's open, whether it's today, tomorrow, Tuesday, whatever, you know, we can all be ready. All right? All right, so listen, when it comes to trading on the market, you know, I train a lot of people, and one of the things that I'm finding very common is that a lot of traders are basically analyzing the market, getting in prematurely. Okay, so they're getting in based on an analysis that isn't final. And I'm going to break this down for you guys so you guys can know what I'm talking about. Now, when you're trading on the market, okay, your analysis for entry should always be based on a closed candle. Okay? Unfortunately, a lot of traders are basing their entry on a moving candle. Okay? They don't really have what I consider to be confirmation for entry. They're just getting in based on the momentum of a candle. Okay? So in order for us to really make good on an opportunity, you have to have certain parameters in place. I'm going to give you guys an illustration on exactly what I'm talking about. Okay? Now, you guys know I offer a free training every week. And this is based on SIT. And that's the Stay in Your Trade strategy. Now, we had this free training yesterday. And when you're following the market based on SIT, you're going to realize how after you've gotten into the market, you can ride that market all the way up or all the way down. But before you even get into SIT, you have to have a reason to have gotten in the market. So therefore, we need some type of closed candle to determine our entry. Okay? Now, unfortunately, a lot of traders are trading the market and basing their entry on momentum only. No. All right, if you guys follow me, I tell you guys that it's all about levels, support and resistance. Okay, it's all about trading the market from resistance down to support, and from support up to resistance. That's all it's ever doing. That's all it's about. When the market is going up and down, your job or our job as traders should be looking for, if I go to the market right now and I see that the market is going up, I need to figure out, since I'm not in the trade, I need to figure out where's the next level of resistance. And once that market makes it to that resistance level, now I'm looking for a reason to get in, going down. Okay, one of the biggest mistakes that traders they get into, or they have, is wanting to get in on the momentum because it's already going up. They fear that they're going to miss something Well, guess what? You already missed your opportunity for getting in. If that market is already going up and it has left support, you cannot get in. And that's where discipline comes in, patience, and that's where you have to wait until that market makes it to your resistance level. You wait for it. If you go patience again and discipline, wait for the right reason to get in. Now, whether the market makes it to resistance or not, you're still waiting on confirmation for your entry going back down. Okay, but what happens when the market makes it to resistance and that market it keeps pushing through resistance? The problem with that is, and this is where green traders come in. A lot of green traders, they'll get into the market because the market broke through resistance. And if it's a ginormous candle, they're thinking that, oh, it's going to keep going up. I see where it came from. Let me get in going up now. Because it broke through my resistance, let me get in going up. And what will happen is the market will turn back around and go back down, leaving you empty up top. Like your order, or not so much order, but your trade is now in the negative. Now it's pulling back below your resistance level in a direction that you should have been looking for a trade anyway, only down. Now it's another thing if you were already riding the market up to resistance and it made it to your resistance and you figured, well, you know what, if it makes it to resistance, I can take my money, or if I have reason to believe that it's going to continue pushing through, then I can stay in. So you got to have the right mindset. You go into a trade from support, your mindset should be, I'm going to ride it up as far as it goes, as far as my tolerance level would allow, or I'm going to ride it up until I feel like, okay, you know, maybe you had to go run and pick up the kids, or you ride it up until it makes it to your resistance level and then you get out. Or you ride it up until you see that the market is pulling back, showing you signs of exhaustion, or showing you signs that it's going to go back down, whatever it may be, you get out that market. So if you follow this type of, just this type of reason for getting in, or confirmation, or this method for entry, it's like you're limiting yourself for getting stuck in these bad trades. Okay? So what I'm going to do, I'm going to give you guys a couple illustrations on this. It's very simple to follow, okay? If you can follow this, you're going to limit yourself for these bad entries, being forced to hold trades that will probably never come back into the money. All right? One of the worst things we can do is get into trades and have no reason to stay in it. Like if you get into a trade and you realize that, hey, I'm out the money, and I don't think it's going to turn back around, don't be quick to hold a bad trade. You know, be quick to hold a good trade. But unfortunately, traders do just the opposite. They are quick to close a good trade, and they're just become so relaxed. Let me just let this negative trade run so far out the money. No, if the trade goes out of your direction, you need to sit back and realize, okay, why is this trade running out of the money? All right? So if your trade is out of the money and you were expecting it to go in the opposite direction, you need to take a step back and realize, okay, where did I go wrong? Is this market, does it look like it's going to ever turn around? If you see that it's never going to turn around, if that's your new assessment or your bias that it's not going to turn around, you need to have some type of plan in place. Whether you close the trade or you lock up the trade, that way you can limit your loss. Okay? Limit your loss. That way you can, like, listen, you don't have to worry. Like, if that trade goes bad, remember one thing. It's not your loss until you close it. Okay? When you lock up that trade, what you're doing is you're protecting the rest of your money. So use that as a way to say, all right, man, that was rough. Like, I made a boo-boo on here. I locked up that trade. I have $40 that's tied into this bad trade. I started with 1,000. Now I have, 960. I still have my account. But you have these two trades valued at, $40 that's tucked away. You don't worry about that. Don't worry about that. Now you get to take a step back, say, all right, you know what? I made a mistake. I'm going to come back later today and look for a new opportunity, perhaps tomorrow, whatever it may be. And when you come back, those two trades that you have the negative 40 balance between, those are off on its own little island. When you come back into the market looking for a new opportunity, you're starting over anew. Clear mind. Don't worry about those two trades. Let them two trades be. Don't touch those two trades. Don't open up a new buy, after a couple days or whatever, and accidentally close that first buy that's locked up with the two, those two trades. Don't mess with that. Don't disturb those two. Okay? Because if you do, you're going to open up the gap. The $40 may turn into a few $100s. So we don't want to do that. What you do now is you trade. Now you're trading the market outside of the two locked up trades. Your goal is to get back the $40. Okay? And I call that your money trade. When you go to the market after you have two trades locked up, now you're starting over anew. The next series of trades are your money trades, meaning those trades are to get back the $40. When you get that money back, now your account is back to 1,000. Shut down those two trades. The worst thing to do is to try to get back, try to work the buy and work the sell. You can do it. Trust me, you can. But if you don't know which way the market is going, listen, get back your 40 and skate. Get it back and skate. Get back your $40. Man, that was a doozy. Man, I could have, you could have, but you locked it up. You got it back after a series of trades, and you're good. You're good. Okay? So that's the main thing that we want to make sure that we keep in mind. Now, it's very important. You know what? 1 second, ladies and gentlemen. 1 second. Okay, so it's very important that we remember to, if you're trading on the market, have your reason for entering the market based on a closed candle. Okay? Do not let a moving candle determine your entry. Okay? Think about this. When you have a market that has been going from support to resistance or from resistance to support, you're getting into the market because you're expecting the momentum from the bulls to fade away as it's going up. Once they make it, or once you see the market make it to your resistance level, now you're expecting what I consider to be exhaustion. When you find exhaustion happening, or the market is showing you signs of weakening on the bulls, you got them. You got them. Now you have to be patient and wait for the right opportunity, okay, for your entry, and then you can ride the market down. But never let your entry be based on, I want you guys to hear me out, never let your entry be based on the candle in the direction that you want to trade opposite of. Meaning, if the market is going up, don't base your entry. Oh, I see it went up and it pulled all the way back. The candle was bullish, and I'm going to get in because it pulled all the way back and left like a crazy candle. But the candle was bullish, like a gravestone doji at the top of a run. That isn't enough. Yes, the candle may have closed, but what if the candle is shot up and is pulling back, leaving that wick, the long tail wick at the top, and you're getting in just because it's pulling back and you see rejection from up top. Or you see the market going down and it's pulling back up, you see rejection from below. That's not enough. The bulls aren't, the bulls and the bears aren't done because, I'm thinking bulls because of the game, but don't worry about that. So don't think that the move is done because the bulls are being pushed back down. You know, that just because you see the momentum coming back down, it's like the bears are in. That's not enough. And don't think that just because the market is driving back up at support, that is your time to get in on a buy. That's not enough. You need proof that that market turned around. And that means the bears got to get in at resistance and drive the market down. All right? But if you're solely getting in because the candle, while the candle was moving, like that candle was fluctuating. Nothing is final. If you got in because the candle was up here and it went all the way down, and you have a long wick at the top, because you're at resistance, you think, oh snap, it was all the way up, the wick is long, super tall, and is guaranteed to now drop, and because the candle was moving, it's fluctuating, that's not enough. Because if you got in and that candle closed down there, the next candle can open up and go right back up and chase the wick and go back up. And then the next candle could go back down. And if you were over leveraged, that second candle could pull you out. We don't do that. That's not what I teach. Okay, so I don't teach that. I teach something totally different. So we want to make sure that we're doing it the right way. Okay, it's very exciting to trade on the market, but something that I tell my students, especially when we're in this Telegram, we have to sit and wait. Okay, I was just talking to another student the other day, and I was telling them, I said, look, oftentimes I'm not sitting there literally, like I'm sitting there with the students now in Telegram watching the charts. But even then, sometimes I'm not just sitting there watching the charts. I may be doing my own thing and glance over, oh, shucks, okay, you guys see this? And then I go back to doing my thing. But I'm not going to sit there and just watch the charts all day. That is a boring day. If I'm not in Telegram and I'm looking to trade on the market, if I'm working, if I'm at the desk doing something or I'm in between doing something, whatever, I'm not sitting there just waiting, okay, come on now, come on. I'm not doing that. If I happen to look at the charts and I see something at my level, I see something setting up, and I'm like, you know what, based on this setup, I'll give it another maybe 20, 30 minutes, this thing gonna drop. 20, 30 minutes, this thing gonna go up. Now I'm keyed in, I'm on it now, I'm focused. But I'm not just sitting there, if I catch the setup setting up, that's one thing. But I'm not just gonna sit there and wait on the setup. And unfortunately, that's how a lot of people take notes. They overtrade. They overtrade because they're sitting there waiting for something. And the more you're sitting there, the more you just got your finger on the trigger, waiting for something, just anything to set off your anything set it off, you're ready to get in. And you get in too soon, now you have to work that trade, and it may not be ready. Show you guys something. I'll show you this. I told you guys we're going to do an illustration. All right? So, let me see something. 1 second. So, I hope these markers work. So we have our resistance level right here, okay? And hopefully you guys can see this. So we have our resistance level, right? And if you have the market going up, these candles are closed. You have the market, it's nearing your level. All you have are, you have 4 candles going up, okay? You should be waiting for some type of setup here. If you see everything driving up, you're sitting there waiting for something to set up properly. Until you get the right setup, you should not be in the trade. You shouldn't be in the trade. Now, this is what happens, and this is how a lot of people, they get faked out. If you're green and you don't know how to trade, first off, let me tell you this. If you don't know how to trade and you don't know your levels, like when I first got started, I shied away from levels. I was very intimidated. Support and resistance was the last thing that I learned. I did not want to deal with support and resistance. I felt like, man, like the market is just bouncing around everywhere, seemingly. But some of the biggest moves are happening from the biggest levels, okay? So if you have, now I want you guys to take notes. If you look at your daily and your monthly chart, more so your daily chart, when you see the biggest moves, they're going to be doing this. I mean, it could take 9 months from point A to point B. 7 months from point B to point C. A year and a half from C to D, and so on. These are major swing points in the market. Now, if you zero in on a smaller time frame, you're going to get all the, the constant ups and downs, but overall, it went from point A to point B. All right? So these levels, these are your majors. So these are the levels that I want to trade. I can care less about the peon levels in between. I don't care about those. I'm putting the best levels on the chart. Like I said, it's all about levels. Okay, when you find the best levels, you're almost guaranteed the money. All right? So if going back to this, going back to my illustration here, if you have the market at one of your majors, okay? If you have it at one of your major levels, if you don't, let's start out with this. If you don't know support and resistance, you won't even know that level exists. You're going to be like me when I first got started. I was trading on momentum, meaning if I saw that I had 3 candles going up like this, and I came to the party, and you may have wicks and stuff, whatever. If I came to the party and I saw this candle like this, remember, these candles are closed, done. If this candle is fluctuating, but it's constantly going up, it's pushing up, my thinking back then was, I'm getting my butt in. And that's what I would do. I didn't know nothing about levels. Absolutely nothing. So what you think would happen if I had gotten in right here and the market kept pushing up? I'm in profit based on this setup. I'm in profit. But this is what happens. If I don't know levels, I never know when the market's going to turn around on me. If you guys remember, when I first got into the market, I funded my account with like $530. I ran that account up to maybe about, I want to say like $2,000 within a short period of time, a couple hours. Actually, no, it was maybe no more than a couple hours. I ran it up, and then by the next morning, and I never forget, I sort of slept with my laptop because I didn't know how to trade. I made some money. First couple trades, I made like $1,500, and then I got caught up in some mess. I opened up trades going up. I was in profit. Whatever, I was in profit. Then it pulls back on me because I don't know support and resistance. Now these trades are out of the money. Then I'm running the market up. Those trades out of the money. I say, well, shucks. I'm out of the money. I'll just run the market down. Open up some sales. I was doing this back and forth. Trade, I got sales, I got buys everywhere. Before you know it, I'm eating away at my strength. I didn't know anything about margin level percentage back then. Knew nothing. But one thing that I did know is that my balance was going down. It was crippling. All right? By the time I knew it, my strength had depleted, and I didn't comprehend how all this stuff worked. I couldn't open up any more trades. I had 1,000 trades open, had no strength to body it and get out of it. By the time you knew it, I blew that account. And I kept doing the same thing. I remember taking real estate money. I was talking to someone last night about this. I remember putting 10 grand inside of my account. And I've done that a few times thinking that, oh man, I'm putting 10 grand and I think, oh, I got all the strength in the world. I still didn't realize how to do it. Okay? With $530, when I first went in my account, I figured I have 20 times that much. They have to come find me. Little did I know, I didn't know enough. I didn't know anything. I didn't know levels. They got me. So I lost that account. Now, let me explain this. Let's go back to the original idea. You have this market. If you know support and resistance, like I said, if you don't know support and resistance, you're just risking. You're winging, because every candle looks like, oh, it's promising because it's a momentum candle. It's going up. Now, if you know support and resistance, you're no longer green. You have a baseline now of when you should or when you should anticipate to get into the market. If I know this is resistance, and I come to the market and see that this market is going up, I'm sitting back waiting. I'm going to wait because I'm patient. I've been around too long to know that I'm not going to get in on something stupid. I'm going to wait until the market makes it here to resistance. Now, unfortunately, this is what they do. Let's say this candle wasn't there. Let's say that when you came to the market, you saw that the candle was up here. Mind you, you don't know support and resistance. So you don't, instead of messing my hands up, you don't know that this is resistance. Okay? You come to the market, this is all you see. A ginormous candle all the way up there. You're thinking, oh my gosh, money time. And you get your narrow head in to that trade. I wish I had my green, but you got in up there. And you may have been in profit for a second, but look, we open up trades, we're out of the money first. We're hopeful that it will go up and put us in the money. All right? So let's say that market put you in the money a little bit, but this is how it is. But by the time that candle closed, remember, you guys know where I'm going with this. Come on now. This is resistance. What you didn't know, for those of y'all who may be green, before you know it, this candle was up here, but what if it closed like this? That's how it closed. And your trades are up there. Like I said, your trades up here. You're out of the money. I'm mixing this all up. You're out of the money now. This is how they get you. You have to know support and resistance. That's the baseline. All right? That's where all the moves start and end. If you're not trading based on, if you don't know support and resistance, supply and demand, whatever you want to call it, you don't know it, then you won't grow your account. You won't get lucky every once in a while. Trust me, I made $1,500 in a short period of time off of no knowledge, no comprehension of support and resistance. At the time, I didn't even know what it was, let alone knowing it and just being ignorant of the fact. Now that I know support and resistance, I'm looking only for a sell at resistance. Just like if you flip this, if the market was at support, I'm only looking for a buy. I'm not getting in, for instance, at the London, and I'm not going to, because the London, the market opened right here at resistance and it pushed up, I'm not getting in as most people were taught to trade. Oh, it broke out. It's the London breakout. We don't play them games over here. All right, that market may shoot up during the London open and then it may shoot right back down. All right, within the next hour or something. So we don't trade like that, not over here. All right, because I know that, I have enough sense to know that usually when these moves happen, the London Open, the New York Open, stuff like that, it usually take place at great levels or at a level that the market was already respecting. So I'm already sitting back like, yeah, I already know what they're going to do. All right. The first thing they're going to do is get those out who are easy to pull out. If you have paper, they have to really work you to get you out the market. All right. If you have no knowledge of how to trade, oh, look, I can sit back and look at y'all. Y'all putting all these buys up here. All we have to do is drive the market down some, just enough to pull you out, because they know your margin of percentage. They know how far they need to pull you out before you're done. Then they turn the market right back around, send it right up, and you're like, you know what? How in the world did they know that I was? And then you start thinking that, man, they're watching me. They're watching me. How about you just flip it and trade different? Don't buy the market at resistance. Look for a sell. Notice I said look for a sell. Listen, even if the market closed like this, if the candle closed like this, that's not when you're supposed to get in. All right? If this candle was moving, some people, they see, if they come to the chart and they see a candle like this, the candle is still fluctuating, still have life, it isn't done yet. Let that chapter close first, and then you reassess the market. So if this candle is like, if it's moving, hasn't closed yet. If you're one of those traders, you're like, you know what? I know this is resistance. See, you could still know resistance, but still lose. Because you know this is resistance. You have this candle that's fluctuating like this, and you may have had wicks showing you signs of weakening as it approached this level. So you're like, oh, I know that it's going to go down. Eventually. All right? It may eventually go down. See, you're looking to try to get in. I want to be all the way at the top. I want to catch it all the way at the top. You don't have to catch it at the top all the time. You need to get in at the right time. Notice I said the right time. You need to get in at the right level, because one, if you get in too far down, you're getting in, it's just like playing football. You don't want to get in too far away from structure, because now, remember, the farther you're away from structure, the closer you are to the market turning back around and go back up. All right? Just like I'm not going to buy the market here, because if this is resistance, that's all I have. The risk model is too risky, because I don't know when it's going to turn around for real. Sometimes the market will pull up to here and pull back, and the move will start here and then go down. Come on now. So we have to be logical about this. I'm not going to get in just because it's fluctuating. I'm going to wait until this candle closes. And if it closed here, I'm still not going to get in. Come on now. Take notes, ladies and gentlemen. Take notes. Okay? If the candle is fluctuating, I don't have enough of a reason to get in. Still have to wait. Be patient. Okay? Because, see, here's the problem. Here's the problem. And this is where they get a lot of traders. You think you have a really good move because you feel like I have this market sold. I know exactly where it's going. Seemingly. You may know where it's going, and you know what? It may go in your intended direction. This is the problem, though. You have a great setting up, and you may have a reason to get in. But what happens if you get in at the right time? All right? I teach TPES. You get in at the right time, but you're over leveraged. You're trading too heavy because you feel like I got this market sized up. I know it's going to go down. This is what's going to happen. You get in, let's just say you get in too early. No, let's just say the market let's say the market goes down. Let's say it does something like this. And let's just say, I don't know, let's say you got in here. I'm just making an example. You got in there. You're just a little in profit. You feel like, oh, I got in at the right time. Based on your strategy, this is, this is not a TPES lesson. You still have to know your timing. But let's say you got in here, you're a little in profit. All right? Right there. Candle closed just like that. And let's do this. Let's say the next candle actually dropped down. You were in heavy profit. Couple people, they will stack their trades there, or they'll have trades there, put more trades in, say right there. Then the next candle goes back up. Then it does this. They're playing around with you. Then it drops down. If you're over leveraged, guess what? You lost even though you were trading in the right direction. You could have had all this from here all the way down. You could have had all that. Even though you stack your trades, which I don't necessarily agree with that. I mean, I stack my trades on one level and that's it. But if you got your trades staggered, you stack them, now you're going in for the kill now. And what happens if you're going for the kill, got your trades here and here, and the market pulls back on you, goes up even higher, and now you're just, and I know traders who they'll keep stacking them, oh, it pulled back, let me put some more trades in all the way up here. And all the market got to do is say, you know what? They're really gambling right now. Let's send this market up some more. And they'll send it up some more before the drop. And guess what? All this took place at resistance. All we have to do is be patient and let the market fully set up. The market may come to resistance, pull back, go back to resistance, retest, pull back, go back to resistance, retest, pull back, go back to resistance, and then it may drop. And you've gotten in on the first one, you're thinking is, oh man, you mean to tell me I thought I had TPES, I thought I had, I don't know, the bow-legged strategy, whatever strategy you have to get in, you thought you had it sized up, and you thinking now, man, this strategy don't work. Man, I paid this dude $300. This strategy don't work. But really, it's not about the strategy. It's about your flaws. You're over leveraging. You're not giving yourself the strength. See, with me, I sit back and I know that when the market is at resistance, it's fair game. They can do whatever they want, and they'll do whatever they want to pull you out. If you're a part of my Telegram, you know it. My Telegram, sometimes we're at resistance, and I'm like, you know what? I don't have to say anything anymore, because what more can I really say? If I already told you it was at resistance, we're waiting on the setup, I can't just every second tell you do this, do that. Look, nothing has changed, so my bias hasn't changed. One thing for certain is when the market is at resistance, there's one thing that's constant. One thing is constant, and that's resistance. Your levels, it's never going to change. It's going to waver, it's going to fluctuate, but your levels will never change. It's going to always be support and resistance if you got good levels. Don't get it twisted though. They will break through your level. That's why you got to be in with the ebb and flow of the market. If you don't know the ebb and flow, if the market is at resistance and you didn't have a reason to get in, and you got in prematurely, and it blows through the roof, that's on you. That's on you. If the market is at resistance, you had a reason to get in, and this will happen every once in a while. You had a reason to get in. This is why you must have the proper money management. And you have to stay with your trades, because sometimes you have a reason to get in, whether it's the first tap, second, third, fourth, whatever. You have the right reason to get in, and all of a sudden, some type of report may come out, and it may send the market go all the way up. Now you're thinking, oh, my strategy isn't working, it's going up. It's not about the strategy being false. There was news that sent it up. It'll come back. So what is that telling you? You got to make sure your money management is tight. You have to make sure that regardless of your reason for getting into the market, regardless of your reason for getting in, you got to have a level of tolerance in terms of, if that market goes too far, I'm going to lock the trade up. All right? Or if that market goes too far, I'm not going to let these trades run any longer. Let me cut this off at $75. Let me cut this off at $200. We have to have that. See, your strategy may be good, but your money management may be off. You may have a bad strategy too. See, you may have the right reasons to get in. You may be knowledgeable of the right reasons to get in, but your levels may be crappy. This is what happens in a market. All right? The worst thing to do is to have the right reason to get in and still lose. You have to see, one thing I believe in is playing both sides of the coin. You have to know, okay, I have a reason to get in, but what happens if the market decides to go north? What happens if something that's happened over in Italy, something happened with Bitcoin or whatever, it influences this market and send that market against the direction that I'm trading? And it could be a temporary move just to get people riled up. What if you don't have some type of defensive plan? You're going to lose every time. So we have to do, as we're trading on the market, we have to outsmart the market makers. They're not after you. They're not after me. They're after everybody. Listen, there are only two ways to trade the market. So they can't be after everybody. Like, you can't take it personal and say, man, they're after me, man. These markets are rigged. You can say whatever you want. But they know how most people think. So they know where most people are going to send them. They know where most people are going to put their trades in. They can see your stop losses, so they know what to do. What do you think is going to happen if you're not trading with a stop loss? Then you have to rely on your strength. Don't over leverage. Even if you're over leveraging, you have a defensive plan. Lock that trade up. Don't let them just come on your turf and take what's yours. Lock that trade up. Now, I tell you this, don't lock up a trade if you don't know yet if your trade is bad. Meaning, not so much bad as in it's a bad trade. Let me say this. Not every trade is in a negative are bad trades. Like I said, you can get in on the first setup and it goes down in the money, goes back out the money, go back and retest resistance. It's not a bad trade, it's just retesting. They're getting people to buy into the lie that, it's going to go up. They send it up higher to get people to buy into the lie that it's going to go up because they know people are green. They're going to jump in prematurely. Then they send it back down. We done pulled all these traders out the market. And what are you going to do? You're going to do what I did years ago. I would jump right back in, chasing the market. Like I said, if that market is going down, I'm chasing that market, Jack. I'm chasing it. We don't do that anymore. Know your reason why you're entering in on the market. Listen, it's at resistance. They can only get you if you're trading on a buy or if you're trading too heavy. That's the only way you can lose. If the market is at support, the reason why I say they can only get you if you're trading too heavy, one, that's just how it is, and also if you're trading on a buy. Meaning, not if you got in down here at support, up here, you got in at a low price. All right, but if you're getting in at resistance or you're over leveraged at resistance, you can lose that way. But if you're getting in from support, buying the market, if you're buying the market from support, you have all the right reasons to win. But if you're over leveraged and you're buying, you have everything working in your favor. Two directions you can trade the market. If the market is not at resistance, there's only one direction I'm going to trade the market. So that 50-50 it's two ways you can trade. It's 50-50 chance you will win. Guess what? If I'm only looking for a sell at resistance, I've increased my reason, or I increased my chances of winning. If I'm also only looking to get in only after I get a confirmation, that increased even more. If they shoot it up, I don't have a reason to get in, so I can't lose. If I got in, the market went back up, and if I didn't put some type of defensive plan in place, meaning if I didn't lock up the trade or if I didn't have the patience to let it go back to resistance, this is another thing. Let me finish my point. If I didn't have the patience to let it go to resistance, or if I didn't give myself enough strength in my account to let it go back up, then I'm going to lose. I'm going to jump out because I don't have the strength. That leads to my point. If you're trading on the market and you have an opportunity to get in as a sell from resistance, you're doing the right thing. But if you don't measure back, how far am I from resistance if I get in right here? If I'm 10 points away from resistance, if I don't measure back to see, can I survive this trade at this volume if it pulls back? If you don't know that, and the market pulls back on you, you're going to constantly jump out every time. They got you every time because they'll just pull the market back because you can be afraid. Go into the trade beating them. If I see a setup at resistance and I see where the market is and I see where I can get in potentially, I'll measure back. Do I want to get in there? Is it too far from resistance? If it's too far, I don't want no parts of it. If it's within a certain range, this is sweet because I can survive it pulling back. Let it pull back all at once because that's giving me another reason, confirmation as to why it's not going to go higher. And you just sit there and wait. Let them pull everybody else out the market and watch that thing turn around, drop. Nothing's guaranteed, but let me tell you this. The more they keep the market dancing at resistance, the stronger and the greater the likelihood of the market dropping, and vice versa. Have your reason for entry. Don't get in prematurely. And I guarantee you, you're going to notice your percentage of winning trades is going to skyrocket. I guarantee you. Most traders are new. Most traders are going into the market to pay the bills. So they're already under pressure. They're just like me. I was going in looking to get in on momentum. What made sense then based on my ignorance? I didn't know. I was unaware. Now you're aware. Take heed. Don't be ignorant. See, if you've never been taught, you're unaware. But if you know, if you've been taught and you're so closed-minded, tunnel vision, you're being ignorant. You're ignoring the rule. You're ignoring counsel and wisdom. Don't ignore it. I'm telling you, this is, if you model this and you use this, it's all a mental game. Don't let them beat you at it. This is your money. You're trading on your account. Beat them at their game. Listen, Denzel Washington said, I'm leaving here with something. I'm leaving the markets with something. You're not going to beat me. And guess what? If things get too bad, I'll just move some more money over. Bump it. I'm going to move some more money over so you don't wipe my account out. But I got a plan before all that. I'm just going to buy from support and sell from resistance. When I go into, if I put a blindfold on and I'm trying to figure out my trade panel, which one, I'm just hitting the button, I have a 50% chance of winning. Because I'm doing it blindly. But when you're aware and you know, and if I know that I'm only going to sell from resistance and buy from support, I've increased the probability of me winning. Guess why? Because I'm not taking buys from resistance. I'm not taking sales from support. That increased it right there. So I'm not trading all day long. No. Think about this. If I'm taking trades from only the major levels, like I said earlier, if I'm only taking trades from these swing points, game over. Game over. Because I'm going to model this every time it goes here, every time it goes here, every time it goes here, every time it goes here. And that's how you take a little bit of trades and you make more money. Most people think taking a lot of trades. And when I say a lot of trades, I'm talking about as in just trading all day long. You don't have to trade all day long. I open up a lot of trades at one level, going in one direction. A lot of trades at one level, going in one direction. A lot of trades at one level, going in one direction. I'm only looking for trades at this level in one direction. If it don't set up, if it doesn't set up, how can I lose? As I tell my students, you can't lose if you're not trading. You're learning more by sitting there watching the market. Oh, I see what they're doing. They're just playing around with people at that level. And guess what? I'm waiting for the right reason to get in. It's not that hard, ladies and gentlemen. It's not that hard. We have to remember this stuff as we're trading on the market. And if you can take heed of what I shared with you guys today, you take heed of it, it will make things a lot better for you. I guarantee you. All right? It's all about levels. It's not just a saying. It's not. It's real. So I support it. You should support it. And just know that, with that being the case, try it. Try it. All right? Try this and tell me what you think. Try it and tell me, you don't even have to tell me. Just try it and see, man, that dude, he kind of makes sense. You don't have to tell me. Don't tell me. Use it. Use it for your advantage. We got to have patience. Got to have patience. Have patience. Have your reason for entering the market. Don't waver. Don't get caught up in the move. It's designed to do that. Don't get caught up in it. Let them do what they're going to do, because they're not after you. They're after those that don't know. They don't know any better. See, when you see the problem with, I'll say this, then I'm going to go. The problem with traders, this is how traders, they lose themselves in the market. And they find themselves at the same place every year. Oh, 2025, this is my year. I'm telling you, I'm going to crush the markets. Yeah, but what are you doing? What are you doing differently this year that you didn't do last year? Did you get a new mind? Did you get a bigger account? Did you change up your strategy? What are you following? What are you after? So if you're modeling, or let's say if you're trading based on a certain strategy and it isn't making sense, unfortunately what's going to happen is I'm going to give you guys I'm going to flip it. Because if you don't know how to trade, you don't know how to trade. If you don't know when to get into the market, you don't know when to get into the market. However, if you're getting into the market for the right reason, and like I said earlier, you can still lose if you're getting in for the right reason, because you're over leveraging. Imagine the discouragement one would have if they go to the market and they're following what they feel is the right reason to get in, and they're still losing. How can you lose selling the market from resistance with the momentum? How could you lose? You're over leveraged. Imagine you open up a trade before you go to sleep and you see that market is destined to go down. If you open up that trade as a sell, you wake up and you're like, hold on. I have $18.36 inside of my account. And if I remember correctly, that market was at 1.0796. And now it's at 106.27. Based on my metrics, I should have won that trade, because I traded as a sell. So how in the world did I lose? And here you are. You're doing this. You're calling up your broker as if they won't pick up for real. You're calling up your broker. Hey, listen, I'm trying to figure out, I got in on this move. It was a sale and I still lost. And I did everything this big head dude said on his IG live. He said only sell from resistance And I went to sleep, put the trade in, and I realized it was, when I woke up, the trade had gone down, or the market had gone down, and my account is at 1836. What gives? And this is what they're going to tell you. Well, Mr. John Doe, this is what happened. When you got into that trade, while you did trade in the right direction, you didn't have enough strength at the volume that you were trading. The market shot up first to get those who were over leveraged, to get people to buy into the lie that it was going to go up. And then it dropped. You were over leveraged. You were over leveraged. Don't do it. Don't be over leveraged. You're better off having a right reason to get in, trade at a good volume. That way you can trade another day. Do it. Try it. It works. I'm telling you, it works. So hopefully you guys have taken notes. Take great notes. It's going to help you. All right. This right here, you can use this on any market. Any market. Use it. It works. Okay. Hopefully this made sense to you guys. Listen, if you all have any questions, and like I said, this is free game. This is free. It don't cost you nothing. But if you have a question about this, and you think that, I want you to give me a call at 516, what's the number? 560-9871. And we can discuss this. But I guarantee you, when you try this and you really use it the right way, it's going to increase the probability of all your trades. You don't need to trade all day long. Catch 1 or 2 good moves from these levels. All you have to do. Catch 1 or 2 good moves. Let's see, how did I cut this off? Let's see. All right, here we go. Peace and blessings, everyone.